Yo, what's going on, fellas? It's your boy Huncho. Just doing a quick little recap for you guys. I'm gonna be going over the trades that we took this week. I'm gonna start off with mainly the trade started from Tuesday. I think I went over Monday with some of the people in my Discord, but yeah, guys, I'm gonna just go over Tuesdays because Mondays wasn't really too much action going on, but there's a lot that I picked off of from Tuesday that I would really like to share with you guys. So Tuesday, which was the 17th, we went with the 598 puts, and this was at 933. This was basically a market open. And the reason why I went in puts, guys, is because of this rejection of this key pivot. So there's only, you know, like one reason why I would go into a position if like at open, it would be at like a key pivot. So if I see, resistance at this key pivot or a bounce off of this key pivot at open, then I'm looking for a quick play. So I went in puts because I saw, how we were consolidating, in the pre-market, and also how we were retesting the area again, and also consolidating and saw a form of resistance. So this is why I went in puts. And I went in puts, guys, but it didn't go as planned. It didn't. I think it went like 15%, but I didn't take really profits or anything at all. We completely got swept. The 600 level completely ate it up, and it started going higher, and it broke above the key pivot. But then we had a stronger resistance, which was 601.66. Now I'm gonna clear up why I was going puts. Okay, a lot of people were like saying, why are you going puts? You're stupid, because don't you see this is an uptrend or whatever it might be, blah blah blah. Okay, this is why I'm gonna show you guys. So I look at larger time frames, right, to get context. Maybe not entries, but to get context. Okay, so I'm gonna show you guys real quick. Might send me all the way over here. Okay, if we look at the 30-minute, look carefully. You can see this on the 1 hour and on whatever, or even on the 4 hour, right? Okay, look at this 601.66. Look what happened on Friday, right? We got a strong rejection off of there, and we had support from the previous day. And then once we broke under, retested, strong rejection, big dump to the downside. This is why I went in puts, okay? And as you guys can see, what was going on here, as if you guys can see it, this is a chart pattern. It's like a head and shoulders, right? But chart patterns can fail, but levels and price action don't. Okay, so that's why I went in puts. Now the entry, of course, probably was not the best entry. There was a lot of consolidation. Chop is something that I can't control. It's something that occurs some days, and it's just not the best price action. We just end up getting smoked, right? Now here's the thing, guys, and I said this today. I made a tweet on this, and it was mainly for SPY traders, for mainly the ones that trade 0-day expirations. A lot of people tend to miss this move because if you would have held all day, look what happened at the 601 range. We would have held under here. Look what happened. The dump that I wanted happened. Okay, so these went green, right? If we would have held, but obviously I wasn't going to be holding all day. Now the point I'm trying to get to is, if you're not finding, consistent profitability or consistent profits, right, better said, in same day expirations, then it's best for you guys to just start trading 1 day out, 2 day, 3 day outs, okay, or even weekly expirations. The reason why, guys, is because I find myself still, I'm still tweaking, right? I'm not saying I'm the best trader. I'm the most professional. Most of my alerts are for documental purposes, right? Okay, they are. They're for documentation. You're free to join me. If you have the same, view that I have, wherever we are in the market, and that's really it. So I still struggle sometimes with entries, the best entries, right? Now, if you're trying to get the best entry, guys, and you're having a hard time with 0-day expirations, I recommend everyone to just start trading, 1 day out, 2 day out, because that way, guys, you won't get burned as much, and you can trade at the money, because I find myself, ending up closing the positions, and if I would have held my alert all the way, I would have banked, So like if I say the trend is up, the trend is down, it eventually ends up paying. My win rate on that is is pretty successful, right? But it's just the contracts, that we're trading. Sometimes they just don't go as planned, and that's something that we're trying to tweak, right? But the reason why I'm saying this, guys, is because I always tell everybody my account is not your account. Everybody has a different account size. Everyone has a different risk tolerance. So do not be trading these plays or even same day expirations if you have a small account and you're trying to become profitable. Okay. Now, if you have a regular account and you're going in a comfortable position, whether you can afford that loss without having a huge setback, then it's fine, right? That's why I trade the way I do, right? This is for aggressive traders. Now, traders that are trying to become more profitable or trying to compound in their beginning, it's best to have a little bit of a less, a less high risk play involved, and trade, more comfortable contracts, that will end up, allowing you to achieve that goal of profitability, right? So that's my quick tip for you guys. I know that was a little bit of a ramble, but yeah, we're gonna go ahead and continue. This is why I went in puts, because I was looking at that level at 601.66, and I wanted to see, a flush from that area, from this area right here. All right, so that was that. We ended up taking an L on those. I think I trimmed that 50% on the position that averaged down on, but yeah, I didn't bank like I wanted to. So let's go ahead and go to Wednesday, which was the last day before the holiday. So this is the first trade we took on Wednesday, which was at 9:36. It was a 6:01 calls. I think this was a one and done day. Let's look at the 5-minute real quick. Where was it at? Okay, right here. All right. Why did I take calls? Remember, key pivot. Okay. This was pre-market low, was holding. We got a nice pop at pre-market low, and we retested it again. Okay. And we rejected off of the top key pivot, which is 598.90, right? You guys see, this range was, wasn't holding up, and then we got the flush down. So we ended up getting the move down and retesting this pre-market low. So I saw, saw it being accumulated. I saw strength there, and I was like, let's step in. So I stepped in, low risk, very low risk. I would have ended up closing if we would have broken, closing the pre-market low, which was, it was a low risk trade, guys. So, a lot of people were looking at, wait, why are you going calls? Because this looks like a huge flush is about to happen. We're going to break under 597, keep going down. We're going to see 595. But I saw the key pivot, and I saw how pre-market low reacted. So, I didn't think that this was going to be such a large move. But at the end of the day, look what happened, guys. Look, let's say if you wouldn't have gotten here, you would have ended up seeing the rejection at 599.43, and then what? Look, retest. This would have been the safer play. Boom, you could have grabbed calls off of here, close here, and then look, hit the next key pivot, 684. So they tap, they tap perfectly. And this was a very good day. It was a very easy run to the upside, guys. This was a good win. This went over like 100, almost 170% there. This was a good trade, good day, one and done. Nothing to it. It's just playing my levels, guys. And this was Friday. Friday, did we play SPY? We did. But the big play was this Tesla play, guys. The Tesla puts were amazing. Okay, now I'm going to give you guys a little bit of context why I took these Tesla puts. Okay, if you guys see, I posted some charts earlier this week, last week, right? And I posted AMD on the 4-hour, and I posted Tesla on the 1-hour. Okay, now all these levels are key pivots and zones, right, that I was looking at on Tesla. Okay, and the main range that I was looking at was this area between 332.66 and 313.31. Okay, so this area right here was the area I was going to be watching for, either a chop range or just looking for, pops and flushes. Okay, now let's go ahead and take a quick look at Tesla. And let me there's another chart I was using. All right, so you guys see right here. Here we go. This is the chart. So we look at the 1-hour. You see, this is the chart that you guys saw that I posted. And as you guys can see, during the week, we got the nice move to the downside, and we got the pop at 313.31 to the penny. Look at this, guys. Look at this. This was before these levels were jotted down before these moves happened. Look, you could have grabbed calls here, you could have sold the pop, and then look what happened at the range, right? At the top range at 332.66. We got the flush down. All right, so as you guys can see, I ended up taking this trade right at near low a day. Risking if it would have closed above, would have stopped out. But I just saw strong weakness and a strong rejection from this area, and we caught the flush all the way down to around like 320. Around here, I closed the rest of my position, but this went over 270%, guys. This was literally over this was like over $250 per contract. This was a massive return if you played this, because you got to understand the contracts. These were over $1, okay, $1.07. So they weren't that expensive, but they were a good contract there, guys. And these paid out very well. If you caught these, good stuff. This was a good play of the day. Second play we got was the SPY 597 calls. This was at, let's go ahead back to our regular chart. Minute. All right. Why do we go calls here, guys? This was at 11:26. All right. Now, as you guys can see, I posted my SPY levels and I even mentioned about the flush. Look what happened. The levels don't lie, guys. I just play on my levels. That's it. I just spend a lot of time on my chart and I just play off of them. That's all I do. I just trust the levels. I don't know if the market's going to go up or down. I don't know. Okay? I don't know what's going to happen tomorrow. I don't know. All I can say is I just play off of, previous, information. That's it. Previous data. That's all I do. I just play off of that. And I try to position myself as, the best way possible and just profit off of it or, manage the risk. Okay, so look at that. We got a nice flush to the downside. You could even wait for the key pivot close and that rejection. You could have played that, this flush from key pivot to key pivot. You would have got a nice return from there. And even right here, you could have played this close under, and then look, key pivot to key pivot, and then look what happened at this 597.73. If you guys look at the pre-market low, look at that. So when we retested here, this was a no-brainer. Of course it was gonna pop. Why did I go calls up here though? This was at 11:26. I was gonna go here, but because I was still in Tesla puts, I wasn't gonna be, I don't really like playing two positions at the same time. So the indicators I use is VWAP, 9 EMA, and volume. That's it. Okay. So what am I looking at here? The reason why I'm winning calls is because I was seeing a hold above 595.31. Okay. So when I was seeing this hold above, I was gonna be looking for another pop to the upside, because a lot of people were going puts because of this area right here, this supply zone. This area that wasn't necessarily supply yet, because we didn't get confirmation of a rejection there yet. But a lot of people were going to go in puts. I saw it, and I didn't go in puts because I saw strength. I saw how it was holding up, and it was holding up. My last straw, guys, is the 9 EMA. I see this all the time on reversals. You get a nice pop, and then the 9 EMA holds, curls up, and then you get another pop. And then potentially, I even told everybody about a VWAP flush. Okay, so I trimmed half of my position here. And this was at like 30%. This was over $20, $22, $25 a con. Okay, so this was a good return. This was not an L. If you took an L on this trade, then it was just greed on your part. Okay, so yeah, I managed my position very carefully here, and I was looking for a VWAP flush, a potential VWAP flush. We didn't necessarily tap VWAP to the penny, but in this area right here, and also right here, there was a resistance there, so I wasn't gonna be surprised for a flush. All right, so yeah, we ended up flushing back down, and then we held the 594.50 area right here. As you guys can see, look at this. It was holding up, and then consolidation, and then now this area was, used as supply, consolidation under it. This would have been a good area to go in puts, and definitely gotten paid here, guys. And then look at our levels as well. Key pivot test, could have grabbed a pop here, and look what happened. Another test here. Confirmation, key pivot to key pivot. That's all I do. I just play my levels, guys. That's it. I just play huncho levels. No, no holy grail, no code to unlock. It's just huncho levels. That's it. That's all I play. All right, guys. So that's it for today. I'm gonna go ahead and try to make more videos, more recaps for you guys. I know I haven't been doing them as consistently, but I'm trying to, just do these in bulk. That way we can have a little bit more, insight. Just raw footage of just, what goes on in our minds when we enter these plays and such. But yeah, guys, we're gonna go ahead and get locked in, and hopefully we're gonna have a great week. There's a lot going on. I know there's a lot going on. Just manage your positions. If you don't feel comfortable, size down. You don't need to get rich this week. You can get rich. This is a long-term game. Trust the process. Let's keep going. Let's keep winning. See you guys soon.